What are the potential opportunities in the following Bitcoin market? Can my quantitative strategy make money in the current market? If you're interested in knowing more about this, please keep watching. Bybit is one of the best exchanges I've ever used. It provides great market depth, a smooth user experience, and an impeccable interface. Sign up now, and you can enjoy a $30,030 bonus for trading. This is a great offer. BitGet offers a $100 trial fund after you complete a $100 deposit. Remember to complete Know Your Customer, KYC, and trading. Participate in the BitGet X crypto trading competition to unlock the maximum prize pool of $15,000. Well, let's take a look at the crypto quantitative platform I developed. It's still in the testing phase. Let's check the profit generated, as the platform has been running for some days. About 2 to 3 days. Let's check the profit and the profitability situation of all strategies. Just click the Join Now button, or Quantitative Strategy. A statistic board is shown in the upper right corner. Quantitative User Center. It records your total assets and profit generated. In my account, it's earned me over $50. But the figure hasn't shown up here yet, because it requires some time to update, or else the server will be exhausted. This page shows the strategies I applied, current positions, and historical positions. Everything is laid before your eyes. The platform displays all information clearly, and also the previous orders and so on. Let's look at the profitability of every strategy. Let's check on ROO. In fact, I have no idea what it means. The bar below is the accumulative return. For example, $1 and 50 cents is returned on April 4th, and $12 on April 5th. The strategies we employ here aren't the same as the martingale or grid strategies that are commonly known. We build our own quantitative strategies on this platform. It acts like a trader, with disciplined behavior that helps you to generate profit. The total asset governed here is only $209. This $209 is mine. I deposited $200 before. I put $200 in. The line graph here shows the accumulative return, which is almost $14. If we divide it by the deposit, the rate of return is around 7%. Nearly 7%. Very close to 7%. Okay. This return is pretty fair, as it has only run for 3 days. Right? From the 3rd to the 5th, a return of 7% was generated. We should observe the actual profitability over a longer period. Click Start Quantitative Trading, and the strategy will operate. Let's examine how other strategies are performing. For example, in the extract strategy, there's over $1,000 deposit here. Over $1,000 are traded here. Currently, the platform hasn't gone live yet. It's only open to internal personnel and high net worth entities. On April 3rd, the profit is around $3, and around $4 on April 5th. The total profit is nearly $8. The rate of profit isn't really good. It's nearly 1%. Very close to 1%. Still, it generates profit continuously. It's quite good, because the market is choppy. It's difficult to make trend orders, especially since I'm a trend trader. Trend strategy. As its name shows, it's a trend trading strategy. The rate of profit is pretty good. $51 is generated. $51 is made today. Pretty good. Around $1,700 is deposited for this strategy. As for the rate of return, it's around 2%. Approximately 3%. Very close to 3%. Very close to 3%. It's quite a good profit for users who use this quantitative trading strategy. I will observe this for a long while. Let's look at the statistics. There have been some short positions and short selling trading involved. This batch is engaged in short selling. It started with a short position at around $1,900. It's short-term trading because it's quantitative trading and very disciplined. It went short from $28,000 to around $27,000. Pretty well done. A few tradings here did make money. The short selling operation is pretty well done. The previous tradings are short selling too. Moving forward to Trend Strategy 1. Trend Strategy 1 focuses on trend trading in a large time frame. So, no trades have been initiated so far. We shall observe it for some time. Currently, my profits look pretty promising. I'm not lying. This is my account, YouTuber Crypto. This is mine. Alright, that's all. Now we will move to manual trading. Let's start by looking at the weekly candlestick chart. On this weekly candlestick chart, I will switch on the EMA ribbon. We can notice this from the recent EMA ribbon. The EMA ribbon on the weekly level is going to turn bullish, which means the short-term moving average is above the long-term moving average. The trend remains bullish. At the previous period on the weekly level, the bearish market only gets to reverse once. And after the reversal, the market turns bullish. It shows that the bearish trend has no possibility of falling any lower. That's what I see. As you can see here, during the bearish market, it shows a round of bearish trend. The bearish market shows a round of bearish trend. On the weekly level, if the trend were to turn bullish, and then bearish again, triggering the second round weekly bearish trend, Bitcoin could go to zero. Besides, as we review the earlier period, we found that a previous bearish market, on the weekly level, only happened once. It doesn't occur after the reversal. You might ask about this part, but it is not counted, right? This downtrend is too short, after all. The following trend is either consolidation, followed by a bullish trend, then another consolidation, and turns bullish again. These are the two most happen situations. Let's check out the previous chart. I will switch off the EMA ribbon. Let's take a closer look at the daily candlestick chart. Not much information is shown on a daily level. It's almost the same as what we've talked about before. There's a retracement after the uptrend, very similar to the previous trend. I think we can talk more about the 4-hour candlestick chart. Let's take a look at the 4-hour time frame. First of all, we can identify an obvious pattern here. It's a very clear pattern. I have drawn it for you in the previous video. It's drawn here, right? Some people may ask, how I know to draw it this way instead of this? No, that's wrong. So, we've two possible ways to draw it now. The first one and the second one. Which one is correct? I will call it a beginner's mistake. Right? Beginners make mistakes on this. A beginner's mistake. Beginner's mistake number 1. Which trend line should we use as a reference? The answer is the upper one. You may ask, why isn't the lower one? Some people may say the price breaks the trend line, so the trend line must draw backward. The price breaks the trend line again but doesn't crash, so adjust the trend line backward a bit. But this is wrong. It's not valid. Why? Let's study the price action. We notice that the price connects with the trend line at several points. This is the first point, the second point here, and the third point. But the price breaks below the support. So, there are 3 points connected with the trend line. Right? 3 points. Well, let's look at another trend line we drew just now. Is this trend line okay? Is this a valid one? The trend line is considered valid if the price touches it at least twice. At least 2 points. That's the condition. That makes the trend line referable. It should be at least touched twice. No, at least thrice. Actually, it requires 3 points. The price should touch the trend line twice at the front. If the trend line is drawn in this way, the first problem is that the gap in the middle is too wide. This is the wrong condition. Second, there are 3 points in this trend line, and there are 4 in the previous one. Which one has more points? Obviously, the one with 4 points. Hence, it suggests that this is a valid trend line, not the one below. And if the price breaks the trend line, just let it be. It's wrong to shift the trend line backward. When you notice the price breaks below, it's not the way to draw the trend line backward. When the price breaks below, only beginners would do this. And here comes a key point. After the price breaks below the trend line, can we go short at this point? Can we take a short position after the breakdown? Can we open a short position at this point? Yes, you can. Even if you open a short position here. Concerning the ongoing trend, we should exit from this point. And here comes the second beginner's mistake. Oops, it's a typo. Beginner's mistake number 2. Can we go short on the breakdown? Yes, we can. Personally, I didn't go short here, because you notice that the trading volume doesn't increase. By rights, we observe a surge in trading volume during the breakdown. But it doesn't. Also, the price doesn't drop sharply right after the breakdown. If I notice the price action proceeds linearly and slowly from the pattern, I will exit. If I have short positions, if I had shorted here during the breakdown, I would exit if the price went linearly and slowly. Normally, the trading opportunity of this pattern appears when the trend runs 3/4 of its way, and the trend is established. This is the most common one. If the price has already completed the entire pattern, and then goes linearly and slowly, it's actually a false breakdown. Therefore, speaking of technical analysis skills, I think experience is more helpful than the knowledge we learn from books. Only experience is truly decisive and pragmatic. When it comes to practical trading, the things I just talked about are very practical. Let's move to a smaller time frame. As you can see here, it's in a consolidation phase now. A box is formed here, right? We see a box pattern in the short-term cycle. Trend trading doesn't work well in this rectangular area. It's not suitable for that. Instead, given the current market, it's suitable to use quantitative trading, because quantitative trading runs in a shorter term and disciplined manner, hence, profit can be generated. On a larger time frame, like a 4-hour time frame, this kind of box appears. From both daily and weekly candlestick charts, we only easily notice that the trend is going upward, and the trend hasn't ended yet. The uptrend won't cease for now. It's just that it's in a retracement phase, and this correction hasn't ended either. After the retracement is complete, I plan to go long and increase my positions. During the current consolidation and correction phase, I prefer to diversify the risks. As I have spot positions, I fear the price action falls, and it will pose a significant risk to me. So, during this period, I will figure out how to avoid these potential risks and wait for the next bullish trend. I believe the next uptrend hasn't started yet, so we need to pay attention to the risk during retracement, especially when I have many spot positions now. As for Ethereum, I've started to sell some positions in batches, and I will surely buy them back afterward. But now I've sold them in batches due to the Shanghai upgrade. I've mentioned this to you before. Alright, thank you. You're welcome to like and share my videos, and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye-bye.
Eyes in the sky, gazing far into the night. I raise my hand to the fire, but it's no use, 'cause you can't stop it from shining through. It's true, baby, let the light shine through. If you believe it's true, baby, won't you let the light shine through for you?